won't be watered down to be just national security. So we don't even know really how firm or not his policies are. So we'll have to see what happens after the 20th of January.
Yeah, we were discussing that a minute ago, that uncertainty almost seems to be a part of the game plan here. But
Correct.
Back to your market calls.
Correct.
I mean, you made a compelling case about the US, but do you look elsewhere? Are there Asian markets that you see opportunities?
Yeah, so the US, obviously, valuations are quite rich. But in the shorter term, whether you're looking at a year or 18 months, things like momentum, price and earnings momentum have a lot more of a input into returns than, say, value. What monetary policy is doing in terms of liquidity or otherwise, what central banks are doing, what sentiment's doing. So there is still good momentum behind US equities. Momentum, growth and quality were the biggest factors that drove the market last year. We did dip our toe into China after the stimulus last year, and it does look like there is going to be some bazooka-style fiscal policy that I think will probably exceed expectations, perhaps after they work out what Trump's doing with tariffs. So I think China's looking potentially interesting. Europe's got a hell of a lot of bad news priced in. We've just seen after Trump's and rumours around Trump being more targeted with tariffs that the euro bounced, the Mexican peso bounced, even the Chinese currency bounced. So there's a lot of bad news priced into Europe at a time when they've still got quite a lot of room to cut. I think Lagarde said after the 25 basis point cut in December, policy is still restrictive. So there could be some liquidity support there, but obviously the industrial manufacturing base in places like Germany has been very hard hit, and now we've got some issues again with gas prices rising, not to the extent that we've seen in 2022. But you do want to be very well diversified, but it's hard to, I guess, fight against US exceptionalism for now.
All right, Nick, thanks so much for coming in as always. That's Nick Schoenmaker, Client Portfolio Manager at Drummond Capital. We have more ahead on the Asia Trade. This is Bloomberg.
The top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
South Korea's corruption watchdog has filed for an extension of a warrant to arrest President Yoon Suk-yeol after a first attempt last week ended in failure. The police, meanwhile, have rejected a request to detain Yoon, citing potential legal issues. Bloomberg Chief North Asia correspondent Stephen Engel is on the ground in a very chilly Seoul and joins us now. So this, a standoff and the tussle continues.
Yeah, that's absolutely right. And this is sort of the epicenter right now. And as you rightfully said, it has become a legal tussle back and forth. So it's a bit of a stalemate. A lot of the supporters of President Yoon, who of course have been holding out these placards, Stop the Steal, essentially have gone home for the evening after, of course, rallying here in the outside or inside the barricade as well of President Yoon's residence in central Seoul near Itaewon here. They've gone home, of course, because it is quite chilly here. They'll likely be back because at midnight last night, essentially that arrest warrant which was issued a week ago on December 31st by the Seoul Western District Court had expired. Now we're hearing that investigators from the Corruption Investigation Office, or CIO, have applied for an extension of that. So that is a development we could get later today with the court either rejecting or extending that arrest warrant. And then the saga continues, because we all know, of course, that President Yoon, while he is said to be holed up in his residence beyond the barricades up the hill a bit, has refused any access to his residence by investigators. That's why the CIO had turned over the execution of that arrest warrant to the police. Now, the police deliberated, and then they essentially said, we're not going to take up that duty. Essentially, as I go back to that main premise, the legal ramifications could be greater for the police. So they said, essentially they want to take on that legal responsibility. So it's a stalemate right now. We'll have to wait and see how things play out today, if that extension of the arrest warrant is granted or not.
Stephen, of course, Antony Blinken was there in Seoul. He expressed confidence in the resilience of South Korean democracy. It's kind of interesting he felt he even had to say that just quickly.
Yeah, essentially he just reaffirmed, of course, the ironclad relationship that the United States has with South Korea, and then hailed that through this process it shows the resilience of democracy, and he's confident that it will play out in a proper way. He didn't weigh into it too much, other than to say that the United States and the South Korean government, whomever is going to be the leader, are in lockstep with regards to the stresses, obviously, and the provocations that come from North Korea.
All right, Bloomberg's chief North Asia correspondent Stephen Engel there in a very cold-looking Seoul. We have more ahead on the Asia trade. This is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
We'd love to hear from you. We'd love to hear what you think about our shows here on Bloomberg Television. Do you think we're doing well? Do you think we need to change some things?
Do you like Matt Miller?
Should I wear a wig on a regular basis?
Please write that in. I'm scared.
The first monthly loss for the S&P in 7 months, 30 minutes until it started trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Don't miss Open Interest live weekdays.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Tencent's US listed shares fell after the Defense Department labelled it a Chinese military business. The company says its addition to the blacklist is clearly a mistake. For more, let's bring our China correspondent Min Min Lo in Hong Kong. So, what was sort of the rationale or the contributing factors to this listing?
Yeah, well, for background, this is actually a blacklist that was created back in late 2020 when then President Trump wanted to prevent U.S. investments into any Chinese company that they say is controlled or owned by the Chinese military. So Tencent, along with other companies such as Autel Robotics, which is a Chinese drone maker, as well as CATL, the battery maker, has been included now in this blacklist, which doesn't actually carry any specific sanctions, but it does have the impact of discouraging investors from trading with these companies. And you can see last night the US ADR of Tencent falling by about 7.8%. And so this is a stock that we're watching very closely when it opens about 2 hours from now in Hong Kong, because if it falls by a similar size, it would really be the biggest decline that Tencent has seen in a year. And of course, this is the most valuable company in China. Market cap of $480 billion is the second highest weighted stock in the HSI, just after HSBC. So any outsized move there will likely weigh on the broader index as well. And Tencent has put out a statement saying that this is clearly a mistake, that they do not engage or supply with the military, supply anything to the military. And it has said that it will be working with the Department of Defense to address any misunderstanding. We're hearing a very similar statement from CATL as well, saying that it is a private company that was taken public back in 2018, that they do not have any military-related activities, and that this is clearly a mistake. And we know the DoD did note in its filing that companies can request for reconsideration, and some companies have been able to get themselves off the list. And one example is Xiaomi. They got themselves off that list in 2021.
TikTok, of course, another Chinese tech company having some difficulties in the US. Their ban, of course, due to take place on January 19. But, TikTok creators aren't just good at creating content. They're getting quite creative at thinking of ways around this ban. What sort of trouble could this cause?
Yeah, so that ban is set to take effect on January 19, so about one and a half weeks from now. But 3 days from now, on Friday, the Supreme Court is going to hear a challenge to the law that could potentially overturn it. But if it does not, then the tech companies like Google, Apple, they will have to remove TikTok from the App Store. And companies like Oracle, which hosts TikTok servers, they will have to stop hosting traffic from TikTok as well. That doesn't mean that it's illegal for individuals to still use the app, because the onus is really on the tech companies to comply with the law, or they could face billions of dollars in fines. And as you can tell, as you said earlier, on TikTok there has been a flurry of videos from social media users sharing how to circumvent that ban, either by changing their smartphone settings, for example, or using a virtual private network to make it appear as though they're accessing the app from another country where TikTok is not banned. And of course, there is a big uncertainty as well, and that is Trump's inauguration on January 20th. We know Trump has been calling for the Supreme Court justices to pause the law, and he has pledged to somehow thwart this law when he comes into office. So there's still that big question mark there as well.
Bloomberg's China correspondent Min Min Lo there. Take a look at one stock we're watching closely. NVIDIA closing at a record overnight, close to retaking the top spot as the world's most valuable company. We did hear that the server assembly partner Hon Hai Precision, or Foxconn, reporting faster than expected revenue growth, really boosting kind of broadly chip and other tech stocks. NVIDIA also in focus as we head into CES as well, right? That speech from Jensen Huang. But certainly taking a look at this company, very, very close to retaking the top spot as the world's most valuable company. At that last close, NVIDIA has risen 194% over the last 12 months. Well, of course, investors looking to CES are looking for more upside in that share price, awaiting fresh comments from CEO Jensen Huang. He's set to speak in just a few hours at the closely watched event, the trade show in Las Vegas. Investors will be watching out for any commentary around the Blackwell chip, considered, of course, a major growth driver. Despite seeing robust demand, the chip has faced supply constraints due partly to manufacturing challenges. And Jensen Huang also joins Bloomberg Technology tomorrow for more on the company's growth strategy. That's at 11:30 a.m. in New York, the early hours of Wednesday, if you're watching in Asia.
Samsung Electronics says it's ramping up investment in AI for consumer electronics, trying to leverage its market share in gadgets to catch up in the new technology space. CEO Han Jong-hee told Bloomberg that the company will add AI chips in home appliances like refrigerators and washing machines, and it plans to expand its AI capabilities in TVs as well. Samsung shares fell last year as it failed to close the AI chip gap on compatriot SK Hynix. LG Electronics is partnering with Microsoft to use the US software maker's AI technology in its consumer electronics products. The two firms will collaborate on AI agents for various spaces, including homes, vehicles, hotels, and offices. LG has been using Microsoft's voice and speech technologies to power its self-driving AI home hub. And of course, AI has been the dominant tech trend since ChatGPT was launched more than 2 years ago, and it's a theme set to reign supreme in 2025, although it could take a different shape as new applications emerge. More from our Asia Tech correspondent, Annabelle Drawers.
Chips, data centers, energy and spending from big tech. These have been some of the key metrics to understand demand around AI. Now the focus may broaden beyond infrastructure and chatbots to new uses, including scientific discovery.
I think scientists are starting to use it as a tool and apply it in their technology. And by doing that, there's probably going to be a lot more breakthroughs that you'll hear about. But I think that we have, from the public perspective, done a bit of over-indexing on large language models.
Indeed, 2025 could mark a further shift to small language models instead, especially as concerns build over the huge strains that AI is placing on power grids worldwide. That's putting the spotlight on a novel approach to training AI tools that could democratize access to cutting-edge technology.
The new machine learning paradigm will be so-called model over models. What we are talking about is actually a small language models targeting for specific domain. When this decentralized version populated, many more people, many more AI researchers, or democratize, more people will be involved. I think that's very important.
Such an approach could also be critical for integrating AI further into personal electronics like phones and PCs.
I actually would consider this technology to be the foundation for the future that people can have their personalized small language models.
At a device level, there's also set to be a greater focus on what's known as agentic AI, which refers to AI systems that exhibit agency or autonomy.
You're going to start seeing AI being able to do more multimodal, multi-capable things. And I think that the individual might start to feel that a little bit more. They might to see it in their product.
On the regulation front, President-elect Trump could mean less red tape for US tech giants, though that doesn't mean that any lead over China in AI will be sustained.
What we start to see is at the US level, this frontier area of where a select few companies are running away with it, and they look like they're significantly in the lead. But throughout 2024 in China, what we're starting to see is a lot of big, powerful models that are coming out in a more open source community, and the base of China is wider.
The race for AI supremacy in AI is by no means settled as we head into a new year. Annabelle Drawers, Bloomberg News.
We are just getting some breaking news crossing the Bloomberg. Bridgewater Associates are cutting 7% of its workforce. We're hearing that dismissal of 7% of its workforce as the world's biggest hedge fund seeking to remain lean, maintain flexibility to hire more top talent. That's according to a person familiar with the matter. So that cut affecting about 90 employees, according to that source. Headcount is now back to where it was in 2023, but it will continue to hire selectively. A spokesperson for Bridgewater saying that for the last 3 years, they've been focused on rapid evolution, setting big goals and fiercely stopping at nothing to achieve them. But of course, we continue to watch for further confirmation as the Ray Dalio founded Bridgewater, now being led by the CEO, Nirba Day, posting double-digit returns for most of its strategies last year, including an 11.3% gain for its Pure Alpha macro fund. But now we're hearing that Bridgewater Associates dismissing 7% of its workforce. Some of the other stories that we're following from the corporate front: Meta is adding Ultimate Fighting Championship CEO Dana White and 2 other directors to its board, bringing on a high-profile campaigner for President-elect Donald Trump. CEO Mark Zuckerberg says the new members will help Meta take on the opportunities in AI, wearables, and human connection. White is a friend of Zuckerberg's and also a vocal Trump supporter. Toyota says it's aiming to open a futuristic city at the base of Mount Fuji later this year. The company says the first 100 residents of the so-called Woven City will move in soon, mainly Toyota employees and their families. Woven City aims to be a living laboratory for testing and developing new technologies, but Toyota's chair says that it may never become profitable. Dell is rebranding its PC product lines, taking a page from Apple's labelling in a bid to revive weak sales. It's dropping decades-old names such as Inspiron and XPS in favour of a simplified Dell, Dell Pro and Dell Pro Max lines. Meanwhile, AMD says Dell will use its chips for some of its business computers for the first time in a blow to rival Intel. Shares of AMD rising while Intel slipping in the US trading session. McDonald's is no longer setting aspirational representation goals in a revamp of its approach to diversity, equity, and inclusion policy. The company is retiring its DEI pledge in its supply chain and renaming its diversity team as the Global Inclusion Team. McDonald's cited the evolving landscape around DEI in the US as a factor in its decision.
Nippon Steel and US Steel have jointly filed lawsuits in a last-ditch effort to save their planned merger. The companies say President Biden's order to block the deal was made for purely political reasons. Japan's Prime Minister Shigeru Ishiba has also reacted, demanding that the US clarify what the security concerns are.
It is an unfortunate fact that Japanese industry has voiced concerns about future investment between the US and Japan. We strongly urge the U.S. government to take action to dispel such concerns. We need to have a clear statement as to why there are security concerns. No matter how much we are an ally, I believe that the points I have just made are very important for our future relations.
Senior energy reporter Stephen Stapczynski joins us now. Stephen, when we spoke this time yesterday, you said that this was heading to court, and here we are in court. So what are the arguments? What are the chances of success?
This is Nippon Steel and US Steel, sort of a last-ditch effort. They're saying that basically this became a political issue. CFIUS, which is the board that reviews foreign investment in the United States, found that they could not come to a decision on whether or not it was in the best interest. They said that there could be potentially security concerns, national security concerns. The Biden administration locked on that, and the White House blocked the deal just 72 hours ago. They say that that was an unfair review and that they weren't given enough time to respond to this. They also say that the Biden administration had come out against the deal before CFIUS even began their review, which pushed too much influence on their look at whether or not it would be in the best interest of the United States if Nippon Steel were to buy U.S. Steel. Now, the chances of this moving forward and actually being successful is quite slim. The president has wide-reaching powers when it comes to blocking these kinds of foreign M&A. And appealing it to the D.C. court, yes, it might be able to move up, but going to the Supreme Court, it's very unlikely that the Supreme Court would make a decision regarding something that is in the power of the executive branch right now. So all that together shows as quite unlikely. There's another lawsuit as well against other parties, including a rival steelmaker, as well as the U.S. Steelworkers Union, which they say colluded to provide influence against a U.S. trade representative, which also sits on the CFIUS board, to stop this from going forward as well. So we'll see how this pans out. But again, as I said, this seems to be sort of a Hail Mary situation for them, a last-ditch effort.
Yeah, and given the slimness of expectations of success or progress, what are the other options that are now on the table? What would be plan B, C going forward?
So for U.S. Steel, potentially some other purchase by another U.S. company, maybe some sort of guarantees from investors, or spinning off a smaller part of their company. Now, for Nippon Steel, the Japanese firm that's in our region, it's less clear exactly what they're going to do. They looked at U.S. Steel as a way to compete against China. China is the world's biggest steelmaker. They've been flooding the market with cheap steel. And the alliance between Japan and the United States, very close allies, made a lot of sense. in a business way. But now moving forward, Nippon Steel might have to look elsewhere, maybe even outside of the United States. Other growth markets that they've kind of pinpointed include Southeast Asia and India. They have a large operation in India. They have a JV there. They could try to expand that or look for other M&A opportunities within this region. But because of the difficulty with CFIUS, it might be unlikely that they'll look at other opportunities in the U.S. They had pinpointed the U.S. as one of their growth markets. They were really excited about it because the IRA had pushed forward potentially more investment in clean energy, which would require more steel. But because of the difficulties with the government, Nippon Steel might have to look elsewhere. And that's ultimately just bad news, not only for the United States, but also for the Trump administration, which, while they do oppose the deal, also wants investment in the United States.
Senior energy reporter Stephen Sapczynski there with the latest developments on Nippon Steel and US Steel. More ahead on the Asia trade. This is Bloomberg.
You make good choices. It's a trait that runs deep. Like to step into big shoes and still walk on your own path. With ambition like that, you need someone who elevates banking to a craft. At UBS, we match your vision with insight and advice to shape a unique outcome for you. Banking is our craft.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
All right, let's take a look at what we're watching when it comes to some of the currencies trading. A little bit of a tough start to the year when it comes to trading in the yen at the moment. We're seeing that sort of 157, almost 158 level. Some strategists saying that potentially that window between 158 to 160 could be kind of in focus now. We're always sort of on the watch for intervention risk at those levels, of course. Let's bring in Garfield Reynolds. He leads our Markets Live Asia coverage for more. So the yen, there was a lot of, I guess, optimism that it would be pretty stable in that fairly narrow range.
Yeah, well, I mean, the difficulty for the yen is that on the one hand, the drivers for US dollar strength over the short to medium term remain very solidly in place. That's a strong US economy, helping to keep yields high. Also, plenty of concerns that the Trump administration will lead to wider deficits. So, that's both a concern from the point of view of the pressure that puts on yields to go higher with extra issuance, but also just a stronger fiscal stance means more of that strong growth. So again, higher yields. Then there's tariffs that may or may not help to drive prices higher, bring back inflation. So all of that's working in favor of the US dollar, and the yen really is going to remain under the cosh unless and until the BOJ really shows a serious interest in not just hiking rates at some stage, but in laying out the idea that it will hike rates soon and then follow up, rather than at the moment, if they do get dragged into a rate hike, the expectation then would be that they would do, like last time, they hiked and then they stopped and talked about whether or not this is the right way to go, and they definitely got some sort of back chat from the government about the Japanese government is nervous about the idea of rates going higher. in anything like a rapid fashion because of what that might do to the economy, what that might do to their standing. So with all of that, the downside beckons for the yen. Was very noticeable overnight when that report on the idea that the Trump administration might take a softer approach, at least initially with tariffs, that set off gains across a lot of currencies. Yes, the yen did gain, but it ended up lower at the end of the day.
Let's talk about the yuan as well, which is very weak, against the US dollar. So is that a US dollar story? Because against the G10 basket of currencies, the yuan has a somewhat different profile.
Yeah, well, I mean, the yuan in a lot of ways should be weaker against a range of currencies. And in fact, the PBOC's concerns about not letting it deteriorate too rapidly against the US dollar, that has meant that in fact it's ended up appreciating against the euro in particular and several other currencies. So to some extent, some of that overnight action where a range of currencies bounced back strongly against the dollar is a bit of a help to the yuan and to the PBOC in getting it sort of like more aligned with what it needs. The thing is that the yuan should be facing weakness. The Chinese economy, even after all the stimulus promises, even after some signs that some of the stimulus measures that have been taken are helping to at least ameliorate the situation there. The economy there remains weak, it remains fragile, and there's a lot of anticipation that there will be various both stimulative policy from the fiscal side of things, but also from the monetary side of things. So there's plenty of weakness baked in for the yuan. The question is against which currency does that manifest?
All right, Garfield Reynolds, who leads our Markets Live Asia coverage. Thanks so much for joining us. We have more ahead on the Asia Trade. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Australian Prime Minister Anthony Albanese has announced a $4.5 billion highway upgrade in an opposition-controlled state, which is, of course, fueling speculation that national elections may be announced very soon. Economy reporter Swati Pandey joins us now. So, Swati, is this part of an election campaign, and is this the start of many more announcements likely to follow?
Look, this is the start of the year, and it's very unusual for Australian prime ministers to come out and make major announcements. And given this is a big 7.2 billion Aussie dollar announcement in an opposition-controlled state, like you said, it has sparked speculation that this may be the start of an unofficial election campaign. And Albanese is in fact touring Queensland, where he made this announcement, Western Australia and Northern Territory this week. So it looks like a very busy calendar for holiday season. And he was asked about this as well, and he is not giving anything away. So he did not say this was part of election campaign. He in fact said that this announcement is not in a target seat.
Meanwhile, we're sort of taking bets on when Australians are likely to head to the polls.
The speculation is April looks like a possible month. Announcement for an election date will probably happen later this month after Australia Day, and then April is when we will head to polls. Australia needs to go to polls before middle May anyway, so if not April, it will be May.
Our Bloomberg economy reporter, Swati Pandey there, of course, and we are looking at a potential for even a hung parliament if we were to sort of head to the polls at the moment. So watching as we get closer potentially to that Australian election being called. This, in the meantime, is a picture when it comes to trading across Aussie assets. We're seeing a bit of upside when it comes to equities, about 0.5% higher. There are really gains in consumer discretionary, healthcare-related stocks as well, seeing some gains and tracking the rally that we saw in US stocks overnight, which of course was largely boosted by the likes of Nvidia, some of those broader tech and chip-making related names. Over in New Zealand, we're seeing not a lot of change when it comes to trading in Kiwi stocks there, and the Aussie dollar is a little bit of downside, 62.39. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Yeah, I think that it would be irresponsible for us to ignore the AI revolution. I think that as much as there is a lot of short-term hype, I think long-term it has the potential to be transformative. And so we are spending a lot of time thinking about what elements of it are structurally have barriers to entry. And so there is a winner-take-all element to that and which don't. And it seems to me that things like chips, things like infrastructure and systems has a little bit of that, because NVIDIA is so far ahead, it's expensive to catch up. There's, the technology that it requires to build these chips are sort of based in Taiwan. What we're seeing is that some of the apps and some of the applications, there are no barriers to entry, right? Like, it's fairly easy to come up with, and I don't mean to belittle the complexity of it, but there are not moats around those things like they used to. So I think that there is less of a winner take all in that space. You're going to have to earn that spot. Whereas, it'll be fun to watch what happens. And I think there's going to be a lot of money burned in the process because somebody will develop something and a fast follower will come along and make it better and cheaper, because data gets cheaper and more pervasive, and it's going to be easy for new players to come in and do interesting things. So I think we wait and we see.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about, how do I take everything that I know and I've learned and actually do the opposite? And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is the Asia Trade. We're counting down to Asia's major market opens. And this, of course, as we continue to monitor a 2025 that started off with political turmoil really all over the world. We've been monitoring very closely and on the ground in Seoul, of course, as we wait for really the request to extend the validity of that arrest warrant, the police declining to handle that arrest execution as well. So that is ongoing. At the same time, of course, we've seen Justin Trudeau's leadership really coming to a close after what's been months of diminishing support and public opinion for what was, a person who was once the golden boy of Canadian politics.
Yeah, the end of an era after 9 years and, leaving perhaps with a mixed legacy as well. But on the political front also, the US election certification was reassuringly dull.
Yes.
No dramas there at all. But,
a change from 4 years prior.
Exactly. Here we are with the Open in Japan.
Yeah, let's take a look at how we're coming online. About 0.7% for the Nikkei 225 as we get into the start of trading, and the top pick seeing some gains as well. We did get a pretty strong handover from Wall Street as a little sort of return to dip buying, seeing another session of gains for the US, and in particular we did see that big jump for Nvidia really coming back to the fore as we await for the address by Jensen Huang at CES, of course, as well, which could potentially lend itself to even further gains there. But some of those chip makers and tech stocks really creating some broad leadership there. Here in Australia, we are seeing some pretty good gains there as well. Dollar yen at 157. It was a tricky start to the start of the year for the yen. That 158 to 160 kind of window is what we're seeing as a potential further weakness. And of course, then that gets us into potentially watching out for intervention territory there as well. But it's been quite sort of an interesting start to the year, particularly as, with volumes, things are still looking a little bit dicey with various slow starts to the year around the region. This is what we're watching when it comes to Korea. The Kospi seeing a little bit more upside as we had futures closing up by 1.8%, looking like we'll continue to see kind of that rebound after just a lot of downward pressure both on Korean risk assets and also the won as a result of this ongoing political situation, which of course we still have no resolution. At the same time, we're also seeing kind of saber rattling from the north as well in light of Paul Antony Blinken's visit to the region.
Yeah, you mentioned Australia earlier. Not a bad day on the ASX so far, better by almost 0.5% after a very flat start to the week. Most sectors are in the green, materials looking kind of flat at the moment. The Aussie dollar got a little bit of a boost, courtesy of a slightly softer US dollar, but we did see the Aussie slide the most in 6 years last year. A lot of the action, though, in the bond space at the moment. We've seen US Treasury yields climbing, especially for those longer dated notes. The 30-year yield was up 5 basis points. There's a huge amount of US debt hitting the market, and that's really weighing on bonds. We've seen the 10-year rising about 50 basis points in the past month. That's the highest since May, and that's the Bloomberg question of the day today, in fact, is when will we see that 10-year yield hit 5%? For more on markets, let's get to Homan Lee now, joining us from Singapore. Homan is a senior macro strategist at Lombard Odier. And Homan, we're seeing a reasonable start to trade in Japan. We had the Nikkei up about 16% last year. I know you're overweight Japan. What sort of gains are you anticipating in 2025? And are there any sector-specific stories that you like?
Well, we remain broadly constructive on Japan's economy in 2025. Growth will rebound pretty substantially from last year's. And if you look at the consumption indicators, they remain quite healthy, and the wage growth continues apace. So in our view, the domestic setup is pretty nice, and the country is quite well positioned in terms of friendshoring trends within the industrialized countries. And of course, there is the risk of a Trump tariff on the horizon, but compared to, say, competitors like China, the country might be able to avoid the most punitive form of tariff, and it does have its strategic industries that will likely do well in the medium term, getting greater share of the U.S. business. So the medium term and the short term pictures are pretty positive, and for that reason, we think the country's equity market will continue to perform pretty well this year. We think the dollar yen will remain a bit volatile in the near term because we need to digest the initial impact of Trump 2.0. But in the medium term, we think the currency performance will be a little more anchored by the likely policy normalization by the Bank of Japan. And even with that, given the positive picture on the macro front, we think the equity market will continue to deliver a bit of outperformance against the other developed markets and also emerging markets. So roughly, substantial outperformance is quite likely this year.
Now, I know in terms of yen and BOJ policy normalization, you see another tightening move from the Bank of Japan this month. Why is that? Why not March or potentially later?
So we do not rule out the risk of a rate hike happening in March, given the language from the Bank of Japan Monetary Policy meeting in December. We were initially thinking that they will move in December, but that didn't happen. Now, if you think about the domestic backdrop, wage growth is at the highest level since 1992. If you look at the business surveys, they're pretty strong. So our guess is it makes sense for the Bank of Japan to move actually this month, when it has the feedback on wage growth from the branch offices and also opportunity to update the macroeconomic forecast to strengthen the guidance for what the bank itself will do over the course of the year. So we still think January, this month, is the likely window for the BOJ's next move of 25 basis point hike. But if they delay to March, simply because they want to get more data, in our view, that would actually signal that they're willing to do even more for the rest of the year. Because the more you delay, the greater the positive impact from the weak yen will be for domestic inflation and wages and corporate profits. So this is roughly the outline that we have as we go forward. So January is the likely window still, in our view.
You don't seem super compelled either way when it comes to China yet. Is there any sort of catalyst that would potentially shift that position?
So the authorities are making right noises about the fighting the lingering risks in the economy. So the December policy meetings sent right signals about providing more support for consumers and also strengthening the social safety net. And of course, the main instrument the authorities will use will be the fiscal policy. We don't have the specific details yet, but roughly speaking, we'll likely get the confirmation of higher deficit targets and greater treasury bond issuance by the central government as we go forward. And those details will probably be provided in March. Now, what we need for the economy, however, is positive inflation, a cushion for domestic businesses. And for that, they really need to be able to use monetary policy. Now, we've gotten some signals from Beijing in that regard. But that's not terribly different from the gradual changes in the monetary policy framework that the authorities have been engaged in for many years now. So if the authorities are not willing to accept the possibility of more open capital accounts and more flexible FX exchange rate for the yen, then we think ultimately we'll just get a limited version of monetary easing and some fiscal easing down the road. So that's the risk we're dealing with. It's a framework question. It's not really about some specific perfect technical solution. The framework needs to change, and we're not still there yet. So in absence of this, we think what we can do with the market is to simply stay neutral versus emerging market benchmark. And this is what we're doing still. But we'll have to see what signals come out before the two sessions in March.
How are you feeling about sort of AI chip tech related names in Asia? And do you have a preference if you're looking more towards Taiwan or South Korea?
So we're more balanced between Taiwan and South Korea. We'll see what NVIDIA says. Jensen Huang says, in a few hours' time regarding their strategy for Blackwell, and eventually the medium-term strategy for accelerating the evolution in the entire AI chip space. But for us, it is true that 2024 was a banner year for chip demand, and you will likely see a bit of normalization in demand just in terms of growth rate for the industry in this year. But still, the landing zone for growth will be pretty high for many of the hardware suppliers in Asia, especially in the semiconductor sector. So Taiwan is still very strongly positioned for all the cutting-edge AI tech development. South Korea is a more interesting case. The foundry business is struggling quite a bit, and we assume that it's not going to be a serious competition for Taiwanese suppliers in the medium term, but that's probably in the price. But what matters more is that if there's a significant demand and enthusiasm for the next generation of AI chips, the high bandwidth memory business for South Korea could still be an opportunity. And this is what we are already seeing in the export numbers of the country. So what we think is South Korean market could potentially provide that optionality for some positive surprises in the semiconductor sector this year. And this is the reason why we're still willing to be patient with the market for the time being.
Homan Lee, Senior Macro Strategist at Lombard Odier. Always great to chat with you. And Homan mentioned, of course, we're watching NVIDIA very closely because not only did it reach that record high overnight, it's also very, very close to reclaiming that position as the world's most valuable company. We are seeing some of that follow through, of course, when it comes to Asia Tech, Samsung Electronics seeing some pretty good gains there, 1.25%. Tokyo Electron up by over 5.25%. A lot of these names will potentially, investors also adjacent to this watching out for the NVIDIA CEO Jensen Huang's expected speech at the CES trade show in Las Vegas. Of course, a lot of hope for commentary and details around the Blackwell chip. Of course, that's a major growth driver that all NVIDIA and chip investors have been watching very closely, Paul.
Well, let's check in on Nippon Steel as well, losing ground in Tokyo at the moment, off by a little bit more than 1%. Of course, the Nippon Steel and the United States Steel have now filed 2 lawsuits to challenge President Biden's block of that planned merger. One is arguing that CFIUS failed to consider the deal on national security grounds. The other is actually a lawsuit against rival steelmaker Cleveland-Cliffs. But the chairman says Nippon Steel's chairman says they see a chance of winning the lawsuit, although we did speak to our reporter Stephen Stapczynski a little bit earlier, and he suggested given the strength and wide-ranging executive powers of the president, this lawsuit could struggle in the court. We have more ahead on the Age of Trade. This is Bloomberg.
You may